This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back, everyone, to the Research Talks podcast here from Stockbox with Alan Green and Dan Flynn. So, good morning to you both. Anything catching anyone's eye this morning, or this week, I should say, on the markets? Again, a pretty quiet week. Companies raising money and not really much happening. Although Prem had that good RNS actually. It was sort of typically, I think it was up 100% intraday, and then sort of finished down 25. Just the typical volatility that you get with Prem. But they have commissioned that plant, which is obviously very good. So a few things to finish off, but I think the end of the light at the end of the tunnel might be nearing with Prem. That's the only one that stood out to me this week. I don't know if anyone else caught anything.
Yeah, well, there was a couple that I noted. I mean, Sovereign Metals, more progress. The Cassia test bit rehabilitation trials results are all part of the DFS process. That moved on. And then, of course, First Development, Tristan and the guys have got the drilling company, is it DDH1 Drilling, are establishing the camp rig ahead of drilling. And then, of course, this morning we had news from Blencow Resources, completion of the Ormcross DFS program. So again, that's further progress from those stocks edging forward.
Mm.
How about you,
That's
Dan?
good I remember about Sovereign. I did see that news. That's good, isn't it? They got a lot of yield from their rehabilitation there, much better than it was before.
Oh, they have, yeah. The results are outstanding. So the rehab trials 5 times crop yield improvement. So what that proves is a vastly superior post-mining productivity result from the land versus the traditional farming methods. So the good thing is, with that sort of crop yield, they can be, very sure that they can feed the population in future, and obviously that then feeds back into more people coming to the area, improvements in health, education, all the rest of it. So it's really good to see a massive project like this actually having such a positive impact on the not only the regional economy, but for pretty much every single person that lives in the area. That's a really important step for Sovereign.
Mm.
Yeah, I agree. That was nice to see that, definitely. Also, of course, I've just remembered, I think, was it this week that Power Metals divested all of their interest now in GMET, so are they fully out, is that right? And they've liquidated, I'm not sure the number, though.
Yeah, that's right. I can't remember the exact number myself, but they got some money from the first divestment left over, and now it's, I think it's like low double digits. It's like 10 to 15 million sort of amount. So they're really cashed. They're really cashed up now.
13 million. I think they're raising some, but also I think they sold the stake to Duquesne Partners, that an American investment or a family office. Not quite sure which, but that stake was picked up. So this stake was sold directly, which is good to see. And certainly the GMET share prices continue to move higher, which is always good to see.
Mm.
Yeah, absolutely. And as you say, Power definitely cashed up now. So it's 13 million from this one, Alan?
Yeah, 13 million from this though, yeah.
And it was 9 from the previous one, I think, from memory. So that's we probably got 20 million or so. I hope they put it to good use.
yeah, absolutely. I mean, that's a real war chest, isn't it? You can really do something with that.
Yeah, I know you can. Yeah,
especially with the company's market cap only being 17.5 million. It's there's not a lot of upside priced in there, is there?
No, exactly. No.
So it could be a good one for a re-rate.
Indeed. Let's hope so. Okay, well, Mendel Helium, Dan, you want to talk to us today at the top. So they, of course, have announced some interesting news about Bitcoin mining, specifically drilling gas wells to mine Bitcoin.
Yeah, I think Mendel is a stock we all like on here, actually. Alan covered them fairly recently, but like you say, they've put a decent update out this week, which you followed up with a interview, Mark, and with a market cap of 2.7 million, I still think the market's failing to price in what they're doing. So beginning with this week's news, Mendel announced a pretty significant step forward in its plan to use the gas it produces as fuel for Bitcoin mining operations. So originally the plan announced back in March was to use waste methane from the helium wells it's drilling as fuel to power generators for Bitcoin mining. And this does remain the case. But with that incurring an additional cost for stripping out the methane, this week Mendel announced it will supplement this part of the plan with additional wells drilled solely for methane as a source of power. And to do this, the company has entered a lease for some land in Nebraska where it plans to start drilling the Jasper well this week, with results anticipated before the end of the month. So because this area is not known for oil and gas production, and because the well is so simple to drill, relative terms, the cost of drilling Jasper are expected to be less than $100,000. But the upside stands to be very significant. Testing on the well in 2022 showed a 94% methane content with a BTU of around 950, which, as Nick explained to you, Mark, is a level efficient enough to power a generator in the correct volume. The bigger picture, though, is if this well comes through, Nick sees an opportunity to keep drilling wells at low cost across this field, which is pretty much completely overlooked due to a lack of gas infrastructure. This happens to suit Mendel perfectly, though, because it can just connect generators for the Bitcoin miners straight to the wellhead. He said to you, he sees a point in the not too distant future where this field contains thousands of wells periodically broken up by shipping containers containing mining stations. I don't know if he's suggesting Mendel will have drilled all of those, but it's certainly intriguing. My question when I read this was basically whether Bitcoin mining is, still a thing now, that there's fewer coins left to mine and the sector is so hot, like everyone's all over it. But in your interview, Mark, Nick seemed pretty confident, saying basically the key to making it work is getting the power as low cost as possible, so you can actually make a decent margin on any of the Bitcoin you produce. And by generating long-term consistent power itself from cheaply drilled gas wells, that is exactly what Mendel plans to do. So I think the thing to look out for here in the first instance is the results of the Jasper well. Assuming that delivers as Mendel expects, we'll then want to see how this Bitcoin mining will work in practice. Nick said there's three options. One is the company buying the equipment itself. Another is leasing the equipment. But the one with the highest potential for returns is JVing with someone who will provide the equipment and handle, the technical side. Nick said Mendel's already been approached by third parties in this respect. So perhaps we'll see updates there soon. So we'll see what happens there. It certainly has a lot of potential. But of course, the nearer term potential for Mendel continues to lie in its helium operations in Fort Dodge, Kansas. And the company is on the cusp of taking its Rostwell live, with this now expected to take place in early September. So as we've covered here before, this will be a major step forward for the business in terms of its balance sheet strength. Mendel expects Rost to generate monthly revenues in excess of $100,000, perhaps higher, as helium prices have risen since those estimates were made, whenever that was. And this will be enough to cover company overheads, with any cash left over then being deployed towards building the company's Bitcoin treasury and supporting the drilling of further wells. And on this latter point, Mendel is already preparing to push forward. The company's been steadily acquiring new land packages in Fort Dodge with the aim of, establishing multiple Ross-style wells targeting the same formations in different pockets of gas, is how Nick's described it before. And meanwhile, through its M3 helium option, it also has access to a suite of producing wells and a large prospective landholding in Kansas's prolific Hugoton gas field. So we've said it before, but at 2.7 million, it feels like the market is putting very little value on what Mendel is doing in Fort Dodge, and it's not putting anything on the Bitcoin mining plans. However, I think there's a good chance that will change once it gets the Roswell live and those revenues start rolling in, because that will enable the company to push forward with everything it's planning, both on the expansion of its helium production and the integration of Bitcoin mining into its proposition. I should say that on top of all of this, the company is also planning to move from Aquis to AIM. So as it continues to take these major steps forward, it could also start to benefit from the greater access to capital, the liquidity, and the broader audience that AIM offers compared to Aquis.
Well, like you say, I think I asked that same question about the Bitcoin mining, and gone are the days when you could mine it in your bedroom. You need to talk about scale now. And he did give a good answer on that, I thought. So I wonder if I just play that clip now. It's all about scale these days, isn't it? And huge sort of data centers. So how does this sort of compete or fit into the modern day, today's day of mining Bitcoin?
Well, if we do your scale part first, if Jasper performs as we think it'll perform, this is a field that could sustain several thousand wells. I mean, probably many thousand wells. So we're not looking at the Nebraska Panhandle, which is where we are, by the way. It's the sort of the part of Nebraska that sort of overhangs Colorado. We're not looking at that thinking, what will we do next? We're looking at that thinking, how many wells are we going to be able to put onto this site? So no issue on scale. But Bitcoin mining has evolved, and there are essentially one-stop shops that will provide the entire kit, the generator, the server, the cooler, probably all presented to you in a shipping container, which can be sized according to your power requirements. So, where we are in Nebraska, we would probably be fortunate if one well was sufficient to run the scale of Bitcoin mining that we want. But because the wells will be so closely spaced, it's quite a straightforward job to connect 2 or 3 or 4 or 6 wells together to run one Bitcoin mining facility. As far as scale goes, I guess if you sort of peer into the future of Mendel Helium, you could imagine a field with many, many gas wells with a periodic shipping container between them, housing the Bitcoin mining facility.
Yeah, I do like the idea of mining, as I said before, like what Darren did with mining, marrying, if you like, digital assets with real hard assets in the ground. Well, you can't use gold or copper to create energy. Well, obviously it is used. Copper is used in energy creation, but it doesn't create energy on its own. Whereas you've got Mendell, who have got access to this gas. The waste methane was the original idea of the helium, but now going for what are not economically viable gas wells for normal gas production into the power grid, but actually should power a module, and you can get these modular units that are delivered, as you said, in a container, almost a plug and play. And I think Buccaneer Energy are doing something similar as well. They announced that this week as well, that they're going to go down that Bitcoin treasury route and mining as well, taking off excess gas when they're drilling for oil that they don't need. Potentially going, doing a similar thing with that Mendel are suggesting as well. So I really like the idea. I think it's a real nice marrying, if you like, of digital assets here and mining. I come back to what Marley Palin said at BHP: we've got to make mining sexy again. And if we can get some of that crypto and tech money and Bitcoin safe haven asset into hard commodities, maybe it'd be great. I think that's a great sort of marrying of two things there to make that sector really quite cool again. So yeah, I like what they're doing, and of course they've got the Roswell coming online soon, so that should hopefully give them some clear cash flow immediately. So yeah, I'm very pleased with that. So Alan, I don't know if you've got anything to add on that.
Well, yes, of course. We've been working with Mendel for some time, and I can just say there's an announcement that's just come out, which is an update on Fort Dodge and Nebraska operations. And operations are actually now underway at Jasper Well, expected to be completed at the end of August. And at that point, they'll be able to confirm that Jasper can support Bitcoin mining. And I don't know if you saw, but there was a social media piece out earlier in the week from Jasper, which showed a fiber optic cable literally less than 30 meters, I think, or 30 yards from the actual from the actual drill site itself. So everything's there to facilitate Bitcoin mining, and it's really exciting. This could really fall into place. But I think in terms of the valuation, of course, the valuation that we're looking for will be based very much around the completion of the acquisition of M3 Helium, and that takes place at the end of September, at the same time as the move to AIM takes place. So that's going to be a transformational time, and I think then the true value of this operation will explode into life. And I think shareholders, sitting on stock now are in for a very exciting time. And I know we're shareholders in M3 and in Mendel Helium rather, and just really excited about the potential that's upcoming. And I think given that it's so close now, end of September, that's 6-8 weeks. Well, 6 weeks away. That's a real focus point for investors.
Exactly. Good. Well, a lot's to happen as we go into September with Mendel, so that's good. So thank you, Alan. So Parkmead, you want to introduce this company to us? I don't think we've spoken about them before.
This is a company that's been on my radar for a few years, actually. It's of course, they are traditionally an independent energy group with oil and gas assets, or they had oil and gas assets. Company's got a market cap currently of 18.5 million. The shares have had a pretty good run sort of so far this year. We saw the high back in January of at 19 pence, currently trading at 16.5p. But at 18.5 million, I think it's quite undervalued, or extensively undervalued, and hopefully, what I'm going to tell you now will give credence to that. So the company's independent energy group. It's got assets in the UK and Netherlands. It has sold all its UK offshore petroleum licenses, of which there were a number, to Serica Energy, and those licenses were held within the limited company Parkmead E&P Limited. This is worth potentially up to 134 million pounds sterling to Parkmead. But what Parkmead has done, it's sold those licenses, but it's retained all of its cash-producing energy assets, of which there are 4 onshore gas fields in the Netherlands, and an onshore electricity wind farm at Kempston Hill, and an onshore energy or renewable energy park at Pitt Reedy, which is called Glenskillen. So I'll come on to more details on that in a second. So Kempstone has been in operation for some time. It delivers exceptional operational efficiency between 96 and 99%, and there's potential there to expand it. Remembering Parkmead actually owned the land as well. The Netherlands natural gas assets have been in production for some time. They're generating an average of 155 barrels of oil per day during the first half of 2025. At one of the assets, Giesbrug, production doubled, and the company's identified new drill targets across the asset base, which they are going to examine and develop as the year goes on. During the first half of the year, gas sales saw price increases. The company was selling at 38 euros per megawatt, now selling for just under 42 euros per megawatt. So it generates very reliable cash flow for the company, and along with the cash flow from Kempston, the company sees this steady influx of cash. It's also got a very strong cash position, which I'll come on to in a second. So the other asset, which is in northeast Aberdeenshire, is a major renewable energy park. This is at Glenskillen. This includes 98 megawatts of wind-generated electrical capacity across 14 wind turbines. some 20 megawatts of solar power and also 30 megawatts of battery storage. So it's a complete energy park. So the energy can be generated from wind or solar and then stored in the batteries. Now, Parkmead's owned land at Pitreedy will accommodate over 50% of the combined installed capacity, and it's currently undergoing public consultation. So initial public consultation took place in April. Scheme designs are now in place. That was that'll be completed during the second half of the year. There's a second public consultation that takes place in Q3, and then once those public consultations are completed, they will submit the planning application to the Scottish Government during Q4. Now, the operators of Glenskillen are Galileo and Power, and these are Galileo is a pan-European renewable energy company. But as I've already said, the Pitreedy land owned by Parkmead will accommodate over 50% of this combined installed capacity. So the company's pivoted from oil and gas production predominantly to renewable energy, and I guess in time, given the money it's generating, it may well continue to do that. But what's really impressive is the cash position. So the company's got a really strong financial position, 13 million of cash in the bank at 30th of June. There's debt of 700,000 from Kempstone, which will be paid down in due course. And from the sale of the offshore oil and gas assets to Serica, it's receiving deferred cash of 7 million in the form of 3 million in February next year, February 27th, 2026, and then 3.9 million due in February 2027. In addition, further payments of up to 30 million and 90 million, which are conditional on field development approvals of Skerrymore and Finn licenses, will be payable as the license application and approvals are received. So, real potential significant cash upside there for the company. In addition to its strong financial position, due to the sale of the oil and gas assets to Serica, it's reduced the staff positions and office space by 40%. Now, the broker Cavendish has been following the company and recently published a note. So this update was out from the company on 22nd of July. So just just on a month ago. And Cavendish stated that its estimates for 2024 are revenues of 5.7 million, adjusted EBITDA of 2.4 million, pre-tax profits of 1.1 million, and significant potential to generate meaningful free cash flow. Cavendish has a price target, so this is currently trading at 16p, price target of 66.5p. And I think, with that potential cash uplift, with that cash coming from the sales and also the income from its oil and gas assets in the Netherlands, the income from Kempston, and then the blue sky potential from Glenskillen, I think this offers great value at 16.5p at the moment.
Thank you, Alan. So that's the first time we've heard about this company. So that's nice. Yeah, that's nice. So they've got producing assets there. So okay, cool, good.
Producing assets, cash in the bank, very little debt, and real potential upside I see there.
Good. Well, thank you for that. So, yeah, got some onshore in the Netherlands as well. Did you know where exactly or not?
Well, the names I've got are Giesberg, Vries, and others. But there is, if you go to the website, it's not fully updated because it's still showing the oil and gas licenses. But you can see the location of the oil and gas licenses in the Netherlands. So so if you're out and about on your bike, Mike, you can cycle.
If I'm out and about on my bike, yeah, exactly. I can maybe go and find them. Yeah, I could. You can cycle most places here in the Netherlands, so I could maybe go and do that. Okay, no, that's good. That's good, Alan. Yeah, a bit of oil. I mean, just quickly on oil play. We don't often talk about a lot of oil plays. There's not that many, I don't think, actually. But what's your opinion on oil? I mean, are you an investor in oil? Do you think it's a good sort of steady
Yeah,
one to consider?
Yeah, I think oil is going to be a key part of our lives for many years to come, and
Yeah.
the simple fact is that there's loads on the ground, and there are ways to engines are clean burning now. There's ways to burn oil cleanly or extract the exhaust gases. So given that our entire world is based around that, it's got a great future. And I mean, if you look at the share prices of the likes of BP, and BP has just made a generational discovery off the coast of Mexico, and Shell, the oil prices are steaming ahead and they're paying substantial dividends. So, they all have renewable energy arms to the business as well, but the core business is still all about oil.
Well, thank you for bringing that to my attention because, I'm not a huge oil investor, but I do like, as I said before, Buccaneer Energy, formerly Entog, just because a lot of it was so low on the market cap, and when the management changed and the renewed sort of turning a new leaf, I quite liked what Paul was saying, and they're of course getting into drilling 2 more wells before year end. So I might do a bit of a comparison between Parkmead, because I can see that obviously Parkmead, they're about 18 million market cap compared to, well, I think around 1.5 at Buccaneer. Now, just looking at there, they do seem to have some more exploration licenses, so maybe that kind of excitement, if you like, of exploration over just steady production is giving them a premium there. But I'll do a bit of a comparison there. So thank you for bringing that to our attention. It'd be good to keep an eye on that one. Cool. Okay, thank you. So Dan, then we're going to talk about another new company, Wishbone. I don't know much about these, so I don't know if Alan does, but I'm sure you can enlighten us.
Yeah, Wishbone's had a cracking week. The company underwent a strategic shift earlier this year, and one of the main things that came out of that was a move in its focus onto its exploration tenements near the Telfer mine in the Paterson province of West Australia. So for those who don't know, Telfer was acquired by Greatland Resources from Newmont at the end of last year. It's produced more than 15 million ounces of gold since entering production decades ago. I think it was the 70s. It's currently producing from open pit and underground mining operations with a processing capacity of 20 million tonnes per annum in place. And aggressive drilling and exploration is currently underway to extend the size of the mine, its resources. So it's a pretty big deal. And if you're looking for the next big mine, the vicinity of the project is a great place to start. So that's exactly what Wishbone is doing. It's consolidated a large footprint in the immediate area surrounding Telfer, and this year it's significantly increased its understanding of its main area of focus in that area, which is the Red Setter Gold Dome target. So Red Setter is located just 13 kilometers away from Telfer, and work by Wishbone has identified a main target at a depth of around 550 meters, showing strong similarities to Telfer. But the target, until this month at least, had never been properly drilled. The only holes that had been drilled were RC ones, which went down to just 300 meters. So Wishbone launched a drill campaign at the end of last month to change this. It's deepening 2 of the existing RC drill holes into the hinge of that deep target for the first time. And the earlier results released this week have been extremely impressive. Basically, Wishbone has intersected a very significant mineralized breccia pipe with its first hole. The full geological details can be found in the 2 releases from the company this week. But I think the important thing to know is breccia pipes are like large bodies of rock that can act as a sort of natural plumbing system for mineralized fluids. They concentrate metals like gold and copper in high-grade zones. And Wishbone has encountered a pipe from 570 meters to 722 meters, so an interval of 152 meters within a broader zone of 257 meters with veining and sulfides of chalcopyrite and pyrite, which are key pathfinder minerals on either side of that pipe zone. So as Wishbone's Ed Mead points out, brecciation typifies the style of gold and copper mineralization in the Paterson province. It's present at both Telfer and Javieron, which is Greatland's other massive deposit in the region. So this pipe provides the first physical evidence to support the idea that Red Setter could be a project on the same scale as, or maybe even bigger than those other massive projects from Greatland. Wishbone's share price has responded in kind. It's risen by some 200% this week on the initial excitement as at recording. And with the company's market cap still coming in at just 26.7 million, who's to say it can't rise further if the company is able to continue demonstrating Telfer-style potential? So the next steps from here are deepening the second RC drill hole, getting the assays from the existing drill core, and potentially deepening the first hole even further to see what's going on at even greater depth. So we're likely to learn more about this project and specifically the core of this main target pretty soon. And now interest and momentum have been established. I wouldn't be surprised to see this continue to move higher on strong news. I mean, Wishbone's been one of the most traded and discussed stocks on the small cap market on the back of this news this week. So it has really struck a chord. And in this case, it's not hard to see why. You don't have to look far for an example of how big the returns can be when these strong early signs, evolve into massive discovery. After all, Greatland at Javieron is one of the best examples in recent history. So if those assays from the first hole return any meaningful amount of gold, we could really see this move upwards, particularly with gold prices so high at the moment. I suppose one thing to keep an eye on is cash. Wishbone raised 1.75 million in June, but if it needs to accelerate work on the back of these strong results, then there may be a need to raise more. That being said, if this project is another Telfer and Wishbone can turn into another Greatland, then it could be worth it. I just wanted to quickly add as well, Wishbone's success also bodes well for another company we cover on here, which is First Development Resources. FDR is preparing to, as Alan mentioned up top, it's preparing to drill its Willal project this month, which is also in the Payson province. It's testing a bullseye target with similarities to Javieron, Greatland's project. So Wishbone's early success is a big win for the Payson, and some of the interest in the stock did carry through to FDR on Monday, which saw its own share price jump. And it's, as we're recording, it's having another great day on Friday. So with interest in the area peaked, I think it sets FDR up for a strong increase and a big jump in interest if it's able to show evidence of Javieron-style mineralization when the core comes back later this year after drilling.
Well, if we can get another one or two Greatland golds on the London market, I wouldn't be complaining. It's been a while since, of course, we saw wins like that. So thank you, Dan, for pointing, well, both, obviously FDR and Wishbone there. Australia, maybe that's the jurisdiction to have exposure in, I don't know. Stopbox Australia is sort of launching as well. We have a man on the ground down under, so you can expect to see some more Australia-focused content, either with Australian listed companies, dual-listed companies, or a chance to get on the ground as well, because obviously it's quite far away from the UK. So a man on the ground to visit sites is useful. But yeah, no, that's just good. Okay, well, it's nice to see some more. Yeah, and I do see FDR. Yeah, it's having some trading, isn't it? So that's nice.
Yeah,
good. Okay, good. Well, let's finish off then, if we can. So, Alan, you want to finish us off today with Ramsdens Holdings, who we spoke about before. Of course, it's the pawnbroking, isn't it, company?
It is indeed, yeah. So Ramsdens Holdings, RFX, not the fish and chip shop as we were talking about earlier, but yeah, this company has really evolved into a real force in its own right. Just a bit of history. The company started in 2001 with 3 stores, and it grew via acquisition, driven largely by buying gold. And the company had 120 stores in April 2013, and of course the gold price crashed. That triggered diversification into forex, into pawnbroking, precious metal buying, and buying of new and second-hand jewellery. The CEO all the way through has been Peter Kenyon. Peter Kenyon currently owns just under 4% of the company. So, I always like these companies where you've got a CEO that's kind of been there all the way from the start and built it up, achieved his dream and seen the company grow. And of course, it is still sort of part and parcel of the company, because he's the formula to success in many ways, and has also steered the company through the difficult times. So this is all about growth. I mean, the company has just grown revenues and profits, driven very largely by the gold price, and of course the opportunities in gold. Last year, we saw the company open new stores: Poole, Romford, Burnley, Blackburn, and Cardiff, and Bury. So we're at now 168 stores in total, and just strong performance throughout. Now, when the run up to a pre-close trading update, which will take place in October, and just looking at the share price, which seems to be trading flat, obviously over the summer, but a real opportunity, I think, to get into the stock, given the opportunity it provides, and I think, totally from left field, Mark, we mentioned earlier that there's an American pawnbroking company that's making acquisitions in the UK. So if M&A is starting in this space, then Ramsdens, I would say, have to be a prime contender, both as a target and possibly to make acquisitions themselves. Of course, I think the markets will force their hand. So in June, the company announced interim results up to the end of March 25. Revenues grew 18% to 51.6 million. Gross profit up 20% to 27 million. Pre-tax profits up 54% to 6.1 million. Net assets at that time, at the end of March, 54.7 million. The company also pays a dividend too, so that's another reason to own the company. The interim dividend was hiked by 25% to 4.5p, and also the company's paid a special dividend of another 0.5p as well. The company's now got 169 stores, and despite cost pressures, expects full year profits to exceed 15 million. And as I said, we're coming up to that pre-close update in October, although of course we're end of August now. October, I'm sure, will arrive very quickly given the way this year's gone so far. But I think this company offers great value, pays that dividend. It's currently trading at 330 pence, so just off year highs of 360p. But given the cash this company is generating, I think it will just continue to grow.
Good. Thank you, Alan, for bringing us up to speed. I did notice, I mentioned just before we started recording about, I read an article on the Wall Street Journal, which was very interesting, about, I think it's called First Cash, which is a big US pawnbroker. They actually had a buy rating on that stock, the analyst who was, it was an article and there was a stock analysis as well. But the big news was that they just expanded into Europe, which is the UK. So I'm not sure exactly what they were taking over. It obviously wasn't Ramsdens, but that it's a similar model. It's the pawnbroking model. It's the short-term loan where you don't have to worry too much about credit checks and all the things that banks may put up in your way. And they're doing very well in the United States. So maybe that's a bit of a sign of that sector, for the future, really, and that as a business model, let's say, and maybe Ramsdens might be in the scope or the spotlight for like a taker. I'm not suggesting that at all, but if First Cash are looking to aggressively expand, I'm sure they'll be looking at companies like Ramsdens. But either way, I think it says a lot for the sector in general, because let's say Ramsdens decide, we don't want to get taken over, then a bit of fierce competition is never a bad thing, is it? For everyone.
Oh yeah, absolutely.
So,
yeah.
No, I think, as you said before, Alan, I think it's like it's perhaps not as exciting as exploration and mining stocks or tech or something, but a good solid business nonetheless. And as you get older, I've certainly noticed myself, I'm moving more money towards the boring stuff.
No, that's it's a sensible thing. I think you've got to look at companies like this, and also it's still a relatively modest market cap, 106 million. So and it's paying a dividend. CEO is still a major shareholder in the company. It just ticks all those boxes. But I think you're right. If you're you're a big American pawnbroking chain, and you're looking to aggressively expand. Ramsdens obviously had to pay a bit of a premium, but you've got that track record and you've got the listing as well. So it's a very attractive company, and I think you could buy it just to speculate on the M&A alone without any of the other obvious benefits of owning the stock.
Absolutely. Well, thank you both very much, as always, for your time. Let's see what next week brings. We head into the last week of August, and then we'll get into September when people start to sort of return, schools go back, etc. And we start to notice the nights drawing in a bit more, and we start to sit around our computers a bit more and some more.
How many shopping days till Christmas?
Yeah, okay. Well, thank you both for your time. Have a good weekend.
Thanks,
Cheers,
guys.
Thanks, Dan. Thanks, Mark.
Bye.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.